This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil with Rabil Stock Research. So today I'm going to go through all the techniques using a specific trade setup on an intraday time frame. All right. Now it's actually a trade in the utility area. And while that might not be the place you'd think to go to when you're looking to day trade, actually there's a lot of good movement in the utilities. And one of the things I've talked about with my subscribers over the last week or two is the fact that the utilities were kind of in a topping area and going through a corrective pattern after a big move to the upside. So there can be some setups that way. The other thing that I suggest is to look at what the leaders are to the downside and to the upside for your day trades, meaning when the market opens, take a hard look and see where if you see any group action. Now, we don't want to look for the stocks that have massive gap ups or massive gap downs. I think those are a little bit tougher to trade intraday as a follow-up trade. But if you have something that's showing weakness, especially based on a sector or an industry group, and you get an intermittent rally, and a lot of times around 10:30, 11, you can find some interesting patterns. So we're going to go through that. I'm going to give you an example. Now, a lot of these techniques are in my book. It's a great place to start. You can go to rabilstockresearch.com/book for more information. Also, if you do like this content, please hit that like button and also subscribe. Okay, just to be clear, so I am looking at an intraday trade. I'm going to focus on shorter term timeframes, but these patterns repeat in all different types of timeframes. If you're not a day trader, you can still learn from this. Want to make that crystal clear. All right, so what we're going to do here is we're actually going to start with the daily chart. I've got the daily chart here, and you can see what's been going on. These have made a big move to the upside. This is a utility, CMS Energy. We get a pullback. We get kind of that 40 to 18 bounce look. Again, that's one of the patterns out of my book. We rally up and we go to a new high here. Now, there's a couple things going on. I know a lot of people focus in on the divergence in the MACD. That's important, but look at what the daily ADX did. It failed to hit a new high. Now, this becomes a lot more important if we've shown strength to the upside with confirmation in the ADX, and then we get failure on a new high. This is failure on a new high, all right? So once that happens, we want to start looking for opportunities for a retracement trade. Now, I'm not going to go down to the daily, but we'd be looking for a retracement back to support on the daily chart, all right? Now, I'm not going to get into the trade that may or may not have taken place here. It actually took place off of a gap, so it would have been very tough to take the trade. And then we had this kind of flagrant price action here that just kind of distorted things. Now, obviously, we're getting the stock is getting the benefit of this failure here, but I think it was very tough to play as a swing trade. Now, look at what happened on the 10-minute. On Friday morning. So we get continuation to the downside, a lot of strength, and look at the strength here and look at the strength here. All right, we've got good momentum in 2 consecutive time frames. Now we get our first rally. That rally takes place in a rally up and again, when you're looking at these type of trades off of a 10-minute chart, I tend to notice somewhere around the 10:30 to 11:15 zone is where a lot of them will set up and potentially trigger. It could be a little bit later than that as well. All right, so that's what we're looking for. So we get a down move, we get confirmation here, we get confirmation here, and we get a rally back up and actually form a pinch as this rallies up towards the 18. I mean, this is a really good setup. Let's just zero in on this for a second. Look at the way this played out. So we did get a big green bar here, but then we had a little bit of selling here, and then we move up really slowly with green bars where we're closing above the open for each bar. And there's not a lot of strength or size in those bars. So we got a lot of strength in this bar and size in that bar, but after that, we rallied up, and you could tell, you could almost look at this like here's a lot of strength, and then we pull back, and then we go to a new high. You almost got a little mini divergence here if you think about it and looking at price, right? We're making a new high, but the momentum is not as strong as it was on this initial bar. So I like to see these tiny bars as it rallies up, and then the smallest bar is this little tiny topping tail as this is forming. Now, as you know, I don't necessarily want to just trade on a single time frame. I mean, you could do that in this instance. just based on the setup. But when I see these big green bars, I'm usually going to be looking for some form of confirmation on a smaller time frame. But I know I can play this off the higher time frame because I've got a lot of strength here, a lot of confirmation here, and I've formed a pinch. So I've got everything I'm looking for on the higher time frame. If we go to the 2 minute, I've already scrolled back so you can kind of see this. Let me just make this a little clearer. All right, so we look at what's taken place. So this rally, the big bar, red bar, and then this move up is this move here. Big move here, pull back, and then we move to the upside. All right, now we had strength to the downside confirmed here and even confirmed here. And then we move up, and this is pretty good strength, caused the green to climb over. But if you notice, this line is dropping, and it continued to drop all the way throughout the ABC up. So this is an ABC to the upside. Now, one of the things I'll tell you is, so there's two things we're looking at. And again, this applies if you're looking at a weekly chart or anything like that. We don't have a lot of strength here. We had a lot of strength based on the sellers. That's the red. All right. But green can't cause the ADX to get above 25. You see how this blue line is staying below the 25 line. So we know that the sellers are still in command through this ABC to the upside. All right. Now, so our bias is to the downside. We're still playing. We're still looking to play. Whereas if this was strong enough, green was strong enough to get this ADX to really pop, then we might not have that bias to the downside. We might just skip this as a potential trade. But we do know that the sellers are still in command. All right. But what we also know is that we got pretty legitimate overrun. Now, as I've said, when you get on intraday time frames, sometimes there is a little bit of there can be some overrun periodically, but this is a 10 minute and a 2 minute. So if I take 10 divided by 2, that's 5. We're looking at a 1-to-5 ratio. So in most cases, we can look at the zero line reversal and whether we're crossing above the zero line as a legitimate signal, meaning if it's 1-to-6, you will get more overrun like this if the ratio is 1-to-6. But if it's 1-to-5, you really shouldn't have that. And so in this case, what I'd be telling you is that I'm not taking a trend line break. I'm not taking, a cross of the 40 as a signal. Whereas if this just rallied up to the zero line, I'm looking for the first sign to get short. All right, because of how ugly this looks, I'm looking for the first entry. But in this case, because of the strength here, which essentially caused all this overrun when it's all said and done, we're looking for a move here, and then look at what happens. We get a secondary pinch on this trade. Now, yeah, it happens above the zero line, but this is the secondary pinch to this pinch, right? We have two pinches, and this one has already triggered, and we're looking at this as and right away after the first bar, we get the second pinch to develop. This is right out of my book. When I go into the details of this 2 time frame pinch play, I explain this in detail. I got to tell you, I think this is a very interesting pattern because what I can do is I can trade off this. I can use the risk on this time frame. All right. And if I want, I can use the targets off of this time frame. So what I would say is your initial risk could be really small. Base your position size off of this, and then your targets will be off of this time frame. Okay, and you can also take trail your stop off of this time frame. So it's a way to enter a trade using a really small amount of risk. Make sure the small time frame has gotten going, and so you can maybe risking. Say if you're risking 1 unit, your targets are going to be probably easily be 5 times what you risk. So you risk $100, and you start hitting some targets. You're looking at a pretty substantial, I think, risk-reward scenario. Now, I would be looking for targets probably down. I want to make sure that I'm hitting some targets as I hit this first support zone here, which is essentially what this low is at this point. Now, if you take a target or two at this point, then you could keep trailing a stop and see if it's going to break through. But I don't want to have a situation where I put on a trade and my first target is down here. You see what I mean? I want to make sure that I'm hitting some targets before I hit that first support zone. And then I hopefully I'm out of half by that time, and then I can trail a stop and see if it wants to turn into something bigger. So these are a few ideas for you. Now, there are a couple things that I would tell you. If you're trading intraday, if you're getting in at 11 o'clock, typically by noon, I like to be out of that trade in many cases. So it might be the type of situation where I trade the whole thing off of this time frame and I'm getting in and out here, playing it really quick and hitting some targets and just going and getting, going in and getting out. Now, if there's really good momentum like this, then I might be willing to sit through the lunchtime to try and get a bigger move. But in most cases, when I'm taking trades off of a 5 minute and a 1 minute or a 10 minute and a 2 minute, I'm really focusing in on trying to get one good leg into the lunch hour. So if I'm in at 10:30, I want to be out by noon for sure. If I'm in at 11, still trying to be out by 12, 12:15, something like that. But you can see the trade through. You can go ahead and see the trade through. But maybe be a little bit more aggressive at a prior low if you're reaching the lunch hour. During the lunch hour, you normally get a lot more. It didn't really show up in this pattern. It did go sideways for about, I guess that was an hour and a half or something like that. So to me, that's a long time to sit and wait for the next leg if I'm day trading off of really small time frames. So don't have a problem being a little bit more aggressive, taking targets when you're playing intraday. We're playing hit and run trading. We're not trying to milk a trade or anything like that. You're trying to add to your bottom line, add the crumbs over time with a high win rate. That's the goal. All right. Let me know if you have any questions. Thanks.